Africa's largest cell phone company, MTN, says its adjusted headline earnings per share increased 7.2% to 470.1 cents for the 6 months to the end of June. The group's revenue increased 1% to 56.5 billion rand, with subscribers increasing 7.5% to 152.3 million. MTN posted an interim dividend of 273 cents per share.
We've got a market cap in MTN of 258 billion, price earnings 16.5, dividend yield 4.5. Bollocks, come to you first. Would it be fair to say that MTN, they're not struggling, but I mean certainly the growth is fading away, and it's that maturing into what's ultimately going to be a dividend player more than anything?
Yeah, I think you still got to recognise its huge cash flow potential there, so it's a good dividend play, and they changed the game a little bit with regards to that. Maybe a bit of a concern because it is a maturing business, but the side that theoretically is not maturing is the data side, and there they're falling way behind, for example, what Vodacom has been able to grow that side of the business. So that's a little bit of concern because you are getting pricing pressure on your traditional side, which you've seen in South Africa, you've seen in Nigeria, they're taking a bit of pressure on that side. You'd expect the data side is the new wave, and there's this little bit too small.
But revenue increasing substantially for the data services though.
Yeah, but on Vodacom growing much stronger, and so one questions why aren't they growing at that pace?
So Tshepo, your view on that with regards to the data flow and the data revenues. It seems that the market pretty much divided as to whether it is a positive or they could be doing far better, as Paolo was alluding to, such as Vodacom.
I'd agree with that. I think they could be doing a lot better. Definitely the stock that I like in the sector, well, amongst the two is Vodacom. So I'm glad Vodacom is doing better in terms of the data.
I know your colleague Andrew Ditburner was telling me all about it today.
That's good. At least we're saying the same things. I'd share that sentiment. I think what you'd expect of MTN is this giant that's been able to evolve and be at the forefront of telecommunications in Africa to be able to adapt to data a lot quicker than others. I think if 5 years ago you told us that MTN would actually be growing their data services a lot quicker than Vodacom, people would almost take that as read, given what the company's profile is. So I'd share in that sentiment in terms of the concerns around that specific.
But isn't that to a degree geography? I mean, Vodacom is really South Africa, and I mean, we've got more cell phones than people, or at least more SIM cards than people. Markets such as Nigeria and the like, perhaps still catching up to that curve, perhaps a few years behind.
I think that's a fair point. The South African market is probably a bit...
I know you don't want to say the word either, but I'm going to make you say it.
That's probably a bit more sophisticated.
There we go. Great word.
In terms of cell phone usage and smartphone usage in particular. So I guess it does make sense. There is scope in the long term for MTN to participate in growth that could potentially happen in the rest of Africa.
What is your view with regards to the rest of Africa? Because if you look at the earnings mix, we know that 40% still comes from South Africa, and the rest, of course, is spread throughout the other geographies. And when you see what's happening in East Africa with the telecoms war that is playing out there and the pricing war that is playing out, we know that they operate in Nigeria. There is growth there, but there's still some challenges that could be experienced on the ground.
Yeah, so these regions are now starting to present themselves with these kind of challenges. And you're starting to see this price war competitiveness come in, and you see it in Nigeria, for example, too. So it still doesn't mean they're not profitable. It's just that you're going to start maybe seeing some maturity in those businesses. But there are other areas within their geography outside of South Africa. They're growing very strong, of course, still growing very strong.
And some of them, and they're doing some clever tricks in Ghana, where they're doing the tower sharing, very, very strong growth there. I think many people look at Ghana, but I mean, I think the IMF or the World Bank's got one of the top 10 growth forecasts, GDP growth going forward. I mean, this is not an insignificant market.
Strong economy, and also a backbone there of some oil finds, I believe. So it actually looks like quite a nice region to be playing in. But they're in a number of regions. I mean, if you take all their collection of operations, it's a very wide company, and you will find some markets finding competition, finding difficulties, and others that are going well. Just in their space, Nigeria quite big, and that is a market that's under price pressures.
With regards to the geographies that Paolo is alluding to, the Middle East, I mean, the likes of Yemen and Syria, we know political risks are coming to the fore and starting to be mentioned more and more so by the company. What is your view on that? Do you think that they just should sit tight and weather the storm?
You answered my question already. I'd probably say that the political risk in itself is hard to forecast. I think a lot of the regions could spark up any moment. That could be said, I think, about most regions in Africa as a whole. So I think they've done well in the African context, weathering the storm and picking the right regions. I'd back them to be able to do the same.
And they still sit on, I mean, as much as we're standing here and saying, or sitting here and saying, oh, you know, slow. I mean, EBITDA margin, 44.6. I mean, that's just a crazy number.
Yeah, it's difficult growing quickly off such a powerful base. I think they're probably cursed by their success that they've had. Market is almost expecting them to continue at the pace that they have for years.
And have they? I mean, you know, to me it was always, I liked MTN because I got the growth story and that eventually it would mature into a dividend play story. My sense is perhaps that transition is happening sooner than I thought.
Sure. I think there's still quite a bit of scope for growth. I think, again, in a lot of regions, they are growing quite quickly. So I wouldn't give up on the growth story as yet. So I wouldn't say the transition is fully in place yet, no.
Also quite fascinating, I spoke to Tshepo Dabengwa, the CEO of MTN, a little earlier, and just talking about the data and the rolling out of infrastructure when it comes to the data scenario that is playing out. It seems that it's self-funding, so it's funding itself. When I spoke to him about the CapEx spend that we're seeing for the likes of MTN, it's down significantly. They are starting to relook at and increasing it slightly. Do you think they should just be aggressively spending any money that they have to try and roll out infrastructure strongly on the continent?
You know, I think their benefit, of course, is they have cash flow to finance this infrastructure spend. It's very strong. You know, the pace at which they go, obviously, will be dictated by their competition and what's on offer. I mean, I think in this game, you need your speed. You know, you need all of these kind of things. So it's critical that they don't just become the cash cow and dividend payer. They have to keep reinventing and reinvesting in themselves. I mean, I think this is part of that game. Otherwise, they will just sit.
So is that a yes? Do you think that they should be taking existing cash?
Well, I think they should be
funding more data.
Very well aware that
expansion.
they need to be going into that space and investing and not falling back on it.
What we are seeing, I mean, as we said, they're all over the place. 21 markets, emerging markets, predominantly Africa, Middle East, and the like. A couple of things. Then one of them is the equivalent of RICA. Now we had that in South Africa, and they lost a couple of 100,000 accounts that were probably dead anyway. Yeah. The challenge there is Nigeria, where again in Nigeria, deadline 30 November, only 50% of their users so far RICA, and they've got another name for it, but RICA to South Africans.
Yeah, so I guess there's quite a lot there that's dead accounts, so to speak, as well. So the 50 might, in effect, be quite a lot higher. But I'm not quite sure how one handles it. I mean, the reality is at some stage, legally, they'll have to switch those accounts off, and it will impact.
And what it maybe means is that down the line, we're going to get true numbers. I mean, I joked earlier we got more SIM cards than people in South Africa. Yeah, that's because I got a couple in my drawer, and now they're non-RICA, so they're dead.
Now you're going to have real stats.
They're dead cards.
You're going to have real stats now, and I think that's probably quite important from us, from an investor community. Yeah.
Okay, so hot or not for you? Tshepo?
Not hot.
Vodacom is hot for you, not MTN.
Is hot for us, yeah.
Why is MTN not hot for you? Is it just because it's looking too expensive? Or
on pure valuations, I think the market is still building in quite a bit of a premium of MTN above Vodacom. I understand the premium given the history of MTN, but I still think that the premium's a bit too wide.
What level would you like to see MTN where you say it's to buy?
The problem with MTN is it's such a large position on the index that you have to make room for it in your portfolio. As an example, in the Swix index, it's 8%. So you're looking at reallocating at least 8% of your portfolio into the stock. So I think we'd need to see a significant pullback for us to be.
I'm not committing to any numbers there.
Probably under 100.
Under 100.
Paolo, hot or not?
Well, for us, I'd say it's kind of warm. We also have a preference, I would say, to Vodacom, given its positioning at the moment. But I think we recognise that this is a counter that's got really strong cash flow, good dividends. You shouldn't really just sniff at this. This is a good dividend payer going forward. And if you recall, most of the returns going forward come from dividends. So you probably need to look at this.
So you would buy at this level?
Yeah, it's in our portfolios, and we have it as a key stock in our portfolio.
And have you accumulated lately at these kind of levels? No. Okay, Simon. I know you've also got a big chunk of that.
tiny chunk compared to what the PRC or someone else owns, perhaps. I like MTN. I've always preferred them to Vodacom, and my story was more than anything that they've got 21 countries. Vodacom's restricted by the Vodafone parent. It's becoming a little more neck and neck. I still like them at these prices. I'm comfortable with them. I think, as Paolo said, it's going to be more about dividends going forward than it is necessarily about share price. But dividends is where you make your profit in the long term.
Okay, so time to shift gears. We look now at Emira Property Fund. A listed property unit trust posted a 5% rise in distributions to 113.52 cents for the year ended June. It's attributed its performance to its increased investment in Growth Point Properties Australia, growth in property income, and benefits from internalising its asset management company. Emira made its first investment in Growth Point in May last year when it acquired 10.25 million units, or 6.4% of the units in issue, at a cost of 116.6 million rand after being given regulatory permission to invest a portion of its funds abroad.
Market cap of 6.6 billion, price earnings 11.7, dividend yield, it's not a dividend, it's distribution because it's taxable, 9.1%. So let's start with you first. Eleni mentioned that stake in Growth Point Australia now up to 9.1%. Do we just not have enough property stocks in South Africa, or properties, that they keep on investing in each other? I mean, I'm just going to go buy an ETF, because if I go and buy one, I'm almost buying an ETF anyway.
That's a fair point. I think the Australian investment in particular is an astute one. It's not a massive part of their business, but they are locking in significantly higher yields than they get in South Africa. So I think that's strategically a pretty decent investment. Sure. In terms of the actual core business and the numbers, it's a difficult one to talk about. The key concern, having gone through their specific numbers, is the increase in vacancies.
Vacancies are frankly getting a bit. If we take out the renovations part, vacancies are 10.3 versus 7.9.
Yeah.
But that's a giant number anyway you spin it.
Yeah, so it looks, this is the bad side of this of the story. But it's also the current position, and the vacancies, as you said, bring the office side up to 18 or so. But the yield is good, and if you think they're going to sort out that vacancies, you've actually got quite a good story going forward.
How do you fix the vacancies if you don't fix the real economy?
So, so this might be actually one of those opportunities that going forward might be presenting itself right now. So I know it looks negative today, but in a year or 2 years' time, when the renovations are sorted out and so forth, there's also some sale of some property. Might be the opportunity.
A lot of their leases, almost a quarter of their leases, up in the next 12 to 24 months. Yeah. They've got to renegotiate those. It really is going to be about that management skill.
Yeah, and I think it's going to be a very tough environment. Yeah, you've got obviously your costs going up, your rates and taxes or electricity, whatever it might be. You've got a weak economy. The guys coming to renegotiate leases, they're not really interested in a 15% escalation or something. So it's going to be really tough. If anything, some might actually go backwards in this environment.
A sense of you want to fill the space. Yeah. Right, if you've got those vacancy levels, as you said, in office around 18.
So offices, yeah, absolutely.
So do you think that the company itself will not really be in a negotiating, a powerful space when it comes to negotiating, and perhaps then the lessee will be able to say, well, this is the rental I can offer you, just to try and bring down those vacancy rates? Do you think that that's a possibility?
Sure, it is. I think this is an issue not specific to Emira. This is specific to the sector as a whole, given the difficult conditions. So I think you can look at it as a difficult environment, but I'd agree with there's quite strong potential here, and they've actually done relatively well in terms of the negotiations that they've gone through this year. You haven't seen a weak performance coming out of those negotiations, so there's nothing to say that you'll have horrendous negotiations going forward on the basis of this year. I think it's a tough environment, but they haven't done anything that would raise alarm bells, and I think management's actually done fairly well to this point, considering the environment that we're in.
Paolo, they're getting rid of some properties. They've got a whole bunch more on the chopping block. They've got, out of their potential debt of 2.75 billion, they've only used about 2 billion. They've got a bit of a war chest there in a sense. I suppose the question is that really prime properties don't come on the market often. And
I think this is the problem. Part of the strategy I see there is to get rid of some of the lower class properties and to reinvest. And they've got a bit of a war chest, using some in Australia, as you noted earlier. I think it's very difficult at the moment to lay your hands on these A-grade prime properties. And I think the whole industry is struggling in that space.
Maybe that's also part of their renovation process, turning some Bs into As and Cs into Bs.
And then once you get your B to an A, you can start to push your rent up.
Well, let's take a look at what's really happening on the ground at this point in time. Do you think that we're just starting to see people being very complacent in terms of where, because you've got to look at the real economy, you've got to look at the growth rates, you've got to look at some of the big risks that lie ahead. Do you think that people are being very cognizant of that and are just starting to be more prudent in terms of acquiring those office spaces?
I think yes and no. If you look at some of the news that's come out in terms of financial services and Old Mutual going into new property, I think it's really company specific. I think some companies and sectors are feeling fairly bullish and going into it. I'd say it's pretty much company specific and sector specific.
Paolo, what about the net asset value? When I was taught about investing in property, and I mean way back, probably when Eleni was being born, I was always told you buy your property below net asset value. And in the early 2000s, you could do that.
You could.
You absolutely could. Sometimes nice chunky belows, 15, 20, 25%. Then the net asset's 11.50, the shares are 12.50. Have those days passed us by? Perhaps in part because it's a fairly small sector.
Yeah, I think partly. One might also suggest maybe the NAV is a bit low and they have to keep revaluing. The other side is there is a 9% interest payment essentially on this instrument, which is going to counterbalance that argument to some degree because it will compete against fixed interest stock and so forth. So the pure NAV play is going to get skewed by its actual yield that it pushes out.
Paolo, hot or not?
Yeah, I think hot for the long term, yeah, absolutely.
So you would buy and hold
for the long term,
warmer drawer?
Absolutely, because as I say, this whole strategy of replacing some of the B grades to the A grades, getting the vacancies down, that's not a 6-month story. But if you're prepared to hold at 9% yield with growth going forward, it's probably quite attractive.
Fantastic. And for you, Tshepo?
It's hot. It's not our top pick in the sector, but it's hot.
What is your top pick in the sector?
We still like SA corporate.
I like it, but I'm going to be honest, when I buy property stocks, I cheat. I buy one of the 2 ETFs. It just,
Tell us why.
Because I never quite got my head around property and the distinctions between the companies, etc. So I always thought, you got to have some property, so I just go and buy PropTrax or Prop 10, and then I get some.